traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 16th day of April, 2015, and this is the daily report for gold and silver. Besides palladium, we do have the precious metals all trading lower today, although just slightly lower. First to gold. Importantly, though, it is trading below 1200 again, 1199.19. That's the current print on the screen. We've seen a low of 94.90 and a high of 1208.60. Silver also trading lower, but close to unchanged on the day, off about 3 to 4 cents. Currently trading 16.28, the low 16.11, and the high 16.48. We'll touch on silver in a little bit. So traders, on a technical basis, the real question that I have been raising, and I believe many other analysts have been raising, is whether or not gold has been consolidating before moving and then returning to a upstage moving market, meaning if we're simply seeing a series of waves, this being some sort of a wave 1 here, a wave 2, and if we're going to re-enter a wave 3. We've talked about the fact that when we looked, we've had a series of higher lows, we've had a series of higher highs, which does meet that criteria. Also, when we look at the moving average convergence divergence, and that's really what has been quite interesting lately, I'm really looking to determine if you look at, for example, this particular rally right in here. It happens through a couple of legs, of course. You've got the first rally, which comes up really to this top here. You do get that cross, and realize that cross is coming around, call it the zero line, really that midline on the range itself, and then it recoups, as you can see right in here. It finds some support and then hits the second leg here. You can see that as the MACD moves up to the upper level part of the range. And so then we get the sell-off in the same way. So now when we look at this particular move here, the question is, are we going to see a very similar activity, meaning that we've had a first leg of the market itself, we've had a small decline, just as we're seeing right in here, and then we'll see it return back to higher pricing. And of course, that's been the real question here, because if we do get a cross, will that cross have the kind of momentum that we need to see us take it down to this particular level, which would be the first level if we would implement a short play? However, at this point, we really don't have concrete information one way or the other. We haven't seen it break above the most recent highs, and those are anywhere between, call it 1218 and 1223, right in this area here. We haven't been able to take that out. We've also not been able to take out these lows at 1182. So we've been in literally this defined range now for the better part of, call it April. We've just been trading within this defined range. So that's what we want to determine before initiating our next move in the market. Now, traders, the fact that the market is trading only off a couple of dollars isn't really giving you the full picture of today's market activity. And I draw your attention to the dollar, which has been under tremendous pressure over this last week, Tuesday, Wednesday, today being Thursday, now trading lower, now breaking through 98. You can see that we had this three-river evening star, and we've definitely now gone into what's called a continuation pattern. And what I mean by continuation pattern is you get these three candles, this, and this. That is your three-river evening star. This is your confirming candle. And as long as we get a succession or series, let's say, of red candles with lower lows and lower highs, something like that, that takes us into what's called a continuation pattern. However, it's a little bit too early to tell. But I will say this, when you consider that normal trading right now has really pushed gold down about $11, $12 on the day, But the fact that you've got this weakening dollar, that's giving it almost $9 worth of strength. And that's where we're getting this net $2 loss on the day. The loss should be really in double digits, 10 or 11 dollars down, until you put into account this weak dollar that has been really prevalent for the last 3 trading days. Now, traders, although we are only halfway through the month, being the 16th today, and this candle could go anywhere, this is a monthly chart of the dollar index. And when we look at the monthly chart, there's one thing that's got to stand out more than anything else, and that is since June, July of last year, every single month has closed in positive territory. The dollar has been higher, higher, and higher up until this month. Now, as I said, it's the 16th, so we could see this dollar easily turn back around and move higher on the month. We've got another half a month to go. However, this is interesting because what we had been witnessing as this market was really moving up is a succession of higher days, higher weeks, and higher months. We're certainly not getting that this month. Another interesting factor in the market today, look at oil. Look at the kind of move that it's made, closing up near the highs of the week. It is being Thursday on the week, well over 55, now trading at 56. And on a technical basis, most importantly, it has come above this $55 mark, which are these prior tops that we saw in the market. So that, to me, on a technical basis, is pretty significant. Also, interesting day in the equities markets. In fact, I was watching one of the financial news stations just prior to recording this show, and they said that the Dow Jones Industrial Average crossed the zero, the unchanged mark, 50 times over this one trading day. Now, it looks as though the Dow is closed a little bit lower on the day, S&P a little bit lower on the day. Most importantly, on the S&P, trading 2,100. Dow, although it's off, over 18,000. And I believe the NASDAQ down, but above 5,000. So we've seen a tremendous move, and we see this market still attempting to flirt and take out these most recent highs, which aren't all that far away. We're trading 2,100, 2,120 being the all-time record highs on the Dow and the S&Ps. So traders, as we look at these markets, so one thing that I find interesting, if you look at silver, that's what we're looking at. This is our daily chart. We have noted that we did get across, though, in the silver market on the MACD on the daily chart. But if you look at these candles, this has got a lower close, of course, than the prior day before. Now we have a higher close than the prior day before, but it's still in red. So we've got really the last 3 days have been red, although the market has been moving up, much in the same way that we saw gold today do the same thing, trading under 1,200, but you've got these 3 red candles, even though the market closed higher than it closed yesterday. Of course, these candlesticks are basically looking at the relationship between the open and close of the session, these being a daily chart. But we do have this cross. I still believe that there is the potential for downside in both gold and silver, but we've got to be cognizant and we have to be cautious of the fact that what we could be looking at is simply a rally, a retracement, and then a further rally. With what's going on in Yemen, I would have to say that we do have some potential hotspots, geopolitical hotspots, but we have to look at the charts, and the charts have not given us the kind of a clear-cut signal that I'm comfortable with. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.